we're up and away. It's Thursday. Full disclosure Thursday. Just Thursday after Thursday. They, where do they go? Where
Feels
do
like
they go?
yesterday.
I know. Oh, and so um a very different week this week to kind of where we were last week, and with a little bit of uncertainty and everything. And now we've gone through the amount of panicked phone calls that I received on Tuesday. What day did the bond market kind of
Monday.
go? Monday. Was it
Monday.
Monday? I was like, the people freaked out. Can you tell us a little bit about what happened to mortgage rates and everything this week, Sean,
Yeah.
so I can make sense of it?
No, yeah. So basically what happened Monday was Pfizer said that the vaccine is ready to go. I was in Texas on a bass fishing boat with my son, so I don't know exactly what was said. But I was like, of course this all happens when I can't do anything about it.
Uh-huh.
So basically, the vaccine, everyone's hinging on life is normal again when COVID ends. And the news of the vaccine makes the stock market rally. When the stock market rallies, mortgage rates typically get worse. So we saw, rates move from Friday to Monday, maybe an eighth to a quarter. And it was a good test because I put out a video a couple weeks ago saying, what will the election do to rates? Will it stay in this range? And the vaccine wasn't even on my mind at that point, but it was a good test because we still stayed in the same range, right? If it went up an eighth to a quarter, that's higher. It's not a percent higher, if we in the beginning of the year. So that's my
Yeah.
concern. But ultimately, it was a reaction to the vaccine, and then things mellowed out. And today, we're recovering. So it's the same old, same old. It's these knee-jerk reactions to what we hope is good news before we have the whole story. It reminds me of when we were in the trade wars, the tariff wars with China. And anytime Trump tweeted that things were looking good, stock market would take off, mortgage rates would go up. And I did a video about that too. I did a video. I'm like, a tweet caused this, and then it comes back. So, but when the vaccine is released, Monday was a good indicator. We'll probably see rates move up a little bit.
So is this and I'm starting to blending together for me now, because there was a certain point where we felt we were moving into a higher end of 2017, and then suddenly rates just started dropping in 2018. We got up to like 5.
Yeah.
When 2018 began, the rate just started dropping and dropping and dropping and dropping, and by the time we hit
that was 18 to 19.
Yeah, end of 18. Yeah.
That was.
And I remember doing a video at the end of 18 September about forced inventory, because it's like, wait, I can't afford this house anymore. But you're absolutely right. It was, it's just 2 years ago we were.
And then I think that's a concept that a lot of people don't really get, because all the money for the mortgage market really comes out of the bond market, right? So money has to go into bonds for money to be available to lend. And when money's not going into bonds, that's where they try slow down the passage of money by increasing rates, right?
Yeah, exactly. It's just, and it's a more secure asset, right? So when the stock market gets really volatile, that's when, and it starts to fall apart, people take their money out to like cut their losses, and they put it in a secure investment like bonds. And then when things are going to be great and I'm going to make a bunch of money back, move that money back over. I think Monday would have been worse if we didn't have the Federal Reserve kind of doing what they're doing. I'm glad it happened, even if rates were the same today as they were Monday. And again, it's an eighth to a quarter change. It's not a big deal. Even if it's a good thing to happen, because it tested my theory. And 100 basis points, we saw the market sell off by it was up to 100 and it ended at 66 basis points for the day. That's a lot.
Explain that to what's a basis. How much is 100 basis points?
100 basis points, 100 pennies.
In regular percentage rate.
Yeah. So 10 basis points is 0.1%. So we saw mortgage bonds sell off by, I guess that would be 0.66%. And I would say 50 basis points typically equates to about an eighth in rate. So that's why I said rates change by about an eighth to a quarter. it was a good test to see what things will do, because there will be good news, and we want it. It's like it's hard being in my world because I want rates to stay low. You guys want rates to stay low, right? Supply and demand. Everybody can afford more house with these rates, but at some point, like, the party will end. But it's a good for a good reason. Like, we don't have to worry about this virus anymore. You know, everyone can take their masks off. Like, we want to get to normal again. But remember, normal rates were 3.875 beginning pre-COVID. So
Yeah,
my and even when this whole shelter in place thing started, I said we're all gonna go home. As soon as this ends, rates will go back to where they started. But I just don't know anymore. We'll see.
we'll see. We'll see. It is interesting, and I hear so many different economic kind of commentators and economists talking about how we can get addicted to low rates, and not realize that there is life in a higher rate market too. But yeah, it's not into fear or worry about. So the one thing that I think is a big development too for us in our worlds, and we want to get somebody in here next week to actually talk about it and cover what everybody should be aware of, is Prop 19. I think we're going to be hearing a lot about Prop 19. It did get called on Wednesday. It was kind of going through. It had quite a substantial lead, I think, early on, and then the margin.
I think it was really slim. It's like 51%.
51% is what, but in the beginning, in the early count, it was 60-40. So it was quite ahead, and then it slimmed down to a narrow where it's only, I think it's passing by about 300,000 votes or something. But the significance of Prop 19 is the fact that we are basically going to get rid of now what we've been using for the last couple of years, Prop 60 and Prop 90, which were kind of limiting. Prop 60 was the one where if you were over 55 and you sold a piece of property in San Francisco that you'd owned for a very long period of time, where you had a low tax basis, you could move that property or that tax basis to the next property that you purchase in San Francisco. It would have to be in San Francisco, but you would have to purchase for what you sold at or less. And that was kind of problematic because we would have, like, you get into neighborhoods like Crocker Amazon in San Francisco, where houses have appreciated a lot. You're going to spend anywhere from $1 million to $1.5 million for a property in that neighborhood, or 900 to $1.5 million. If you have a grandma or grandpa and they're selling a house that they haven't updated, but it's in a neighborhood that's become super popular, it might sell for 900 to $1 million in that neighborhood now, and they only bought it for 40 or 50,000 back in the 70s. But they want to go to a condo in a newer building in San Francisco in a good location that has an elevator, and they cost more than that. And therein lied the problem of really using Prop 60. And it seems that within Prop 19 now, they are going to be able to purchase up to 3 times what they sell for. So if they sell for $1 million, they're going to be able to buy something up to $3 million as a replacement. So I think that's
and keep their tax basis.
And keep their tax basis. So that's actually going to, I think, encourage. I think that will open up inventory for single family homes a lot, and probably stabilize the COVID kind of pressure on pricing that has really come out on single families. So it'll be interesting. So we'll get somebody to come in and speak more about that next week.
I'm curious. I'm really curious to see what happens with that, because I was just on a call right before this with Barry Habib, who's like a real estate economist and a good friend of mine, and we were talking that he's he was speaking nationally, but somebody on the call asked about Prop 19. And I'm curious to see if it makes a difference, because I think a large part of what's holding people back is the capital gains side more than anything else, where the example I use, you have somebody who's lived in Palo Alto for 30 years. Cool, I can move my tax base, but I'm still not giving up $3 million in equity to the government. And I've always been like, wait, it's like, pulling the winning slot machine and then not cashing in your ticket because you don't want to give half away to taxes. So I'm curious to see how big of an impact it makes. It'll be really interesting.
Well, when you get into some of the numbers with some people on that, it's usually only about a third of what they give up, and then it's a third from wherever the cost basis is at. So you get the cost basis up to a certain point, there, and then you take the gain above that, and then any of the prep that you put into it for, like the cost of selling, preparation to sell, the commissions, the transfer taxes, all of that stuff increase your tax basis, or the cost basis.
Right.
So, we often sit in front of people and they're like, you know what, for the ease of just being able to do what I need to do, I'm willing to pay. And they're sizable amounts, but they do. There is, though, a new opportunity that I'm learning more about at the moment, and we'll get somebody to talk about this too. But opportunity zones. These are probably one of the most interesting kind of, for people who are afraid to do 1031 exchanges because of the time pressure to get into another deal. Opportunity zone funds are probably the best opportunity. And in a nutshell, without getting too deep into it, an opportunity zone is where areas that are identified as they're basically zip codes that are underserved, underdeveloped, underutilized, and there's many real estate opportunities in these areas. The government, if you invest in a fund that is pushing a strategy in an opportunity zone, these funds are like any kind of mutual fund. They pay returns, they pay you on your money, but you can take if you have an investment with an exchange, you have to put it's all in, all or nothing. With the opportunity funds, you can keep your original investment and not pay tax. And then your investment in the opportunity zone of whatever you put into it is allowed grow tax-free for the time that it's in that investment. And then you don't have to pay any capital gains until 6 years out. And you can actually defer all of your capital gains and actually use gains that you make on the investment to cover your capital gains on the original investment. And after 10 years, you've no more tax on your investment. So everything that you have you'll be pulling out tax-free. So from a retirement planning, where if somebody doesn't want to be in a piece of real estate when they hit 70, and they're in their late 50s, this opportunity zone is there, and the fees are lower. There's no time pressures. They're quite and there's one fund I've been introduced to where it's actually very liquid. They do it on a process where you buy shares like you do on a regular stock market, so you can actually liquidate your shares if you need to at any point, which is not something that you can do. But a topic that we're going to have to cover, because it is going to be, I think there's going to be a choice between people of, will I choose the Prop 19 route or will I choose the opportunity zone route? And those are going to be the two scenarios for that kind of older homeowner. So
interesting.
We'll be experts in 2021 on this stuff. We're only learning. We're not there yet. But we're getting there. Haley, what's going on the numbers?
Kind of the same old.
Really?
Yeah.
Houses coming in, same amount going out?
69 coming in on single families.
Mm-hmm.
94 condos came on, so fewer actually than we've had.
Wow, condo inventory the new stuff is starting to go down.
I think at this point, people are having conversations with their agents about holding off until the new year. Yeah. And only 15 new multi-units. 93 single family homes went into contract or went pending in the last week. 94 condos went into contract or went pending, and 10 multi-units. And then 53 single families closed, 71 condos, TICs closed, and 4 multi-units closed. So we're actually, I mean, you like to see it, 69 single families and only 53 closed. That's there's a few that are lingering out there.
There's a few. So the gap, there's a little bit of widening coming in there that we didn't have before. It was almost on par, coming in, going out. But that's on the condo market. That's really really interesting. That we're almost at a point now where what's coming in is what's going out. So that speaks volumes to where we were 2 months ago.
Yeah, and I'm just going to take a look here to verify our point on the days on market for single families that just closed. The average was a little higher than I would have thought. It was 20 days on market. So there are quite a few that were in like the 20, 30 plus days on.
Well, I also think maybe a little bit on because the one thing about DOM is I think once you go
coming soon.
You have to kind of go pending before the count kind of stops on the DOM, and we are starting to see the pricing is kind of staying where it's at, but more sellers willing to accept contingencies, not as hectic a market of completely no contingencies, which that I prefer.
How do I get into that market? That sounds so fun.
Yes. Well, that's actually on the inspection. They're still squeezing the lender. You're always going to get squeezed, Sean.
But I'll take a longer close. I'll at least, that would be nice.
Yeah.
But long for you, Sean, is like what? Like
just give me 21 days.
Yeah. Which is crazy. I just want to hammer home the need to work with a local lender because, a couple times a year we encounter clients will have lenders that they're already approved with, they want to use. Usually it's their bank that they bank with. And they just kind of called the 1-800 line and like got pre-approved. And a lot of them are in like New York or whatever. And they don't do the things that we do here. So I was like having a conversation with one about we wanted to offer, and he was in New York, and I was like, how long can our contingency be for financing? He like literally didn't even like know what that meant. I was like,
it was like 30 days.
Like 14 to 25. I was like, which one is it? Is it 14 or 25?
Well, just that little box on the contract, just don't check it. And I think that gives us 17. So we'll be fine.
Yeah.
I mean, and he's like, well, we'll make it work. I'm like, will we? I don't know how that. No, we got to be spot on. So work with a local lender.
Work with it, and make sure it's a local lender that knows what they're doing, vetted, and proved. There's a local lender, a bank, small kind of community bank, and I'm a big fan of small community banks, but their underwriting is in another state, and they're a nightmare to deal with. They're like they're really difficult to deal with.
Yeah.
So,
Yeah, they just have to understand. I think for our market, if you have to understand jumbo. So if they're in another state and they probably do a lot of conventional loans, those are easy. But if you don't understand, I have one in Redondo Beach. It's a site condo, and I had to tell the underwriter how to underwrite it today. Like, so and that's why they're not that common, right? At least, I've seen a handful. I'm seeing them more and more in our area, but you just have to know how to get through the hurdles.
and yeah, site condo that's where there's two houses on one lot.
Yeah, I did two of
That's,
those this year in Oakland. Brand
you know,
new, beautiful, really cool, but yeah, really interesting. I think it's a really cool concept is we're trying to develop more inventory. It's a cool way for builders to go in and kind of get 2 for 1.
Yeah, I've known there's actually a number of Bay Area builder developers who have moved down to Southern California to the LA area, and that's basically what they're focused on in LA. Because it's very easy to get through the permitting process, and it's very straightforward, and everybody's into it, nobody fights it, and they turn these things around in 6 to 8 months.
Yeah, this one's in Redondo Beach, and the realtor down there is like, that's the whole city is basically this way. And I'm like, yeah, I know. I had no idea. Yeah. It's good to hear that contingencies are opening, even if at least a buyer has a protection, right? Like if you can have an inspection contingency, wonderful. But I had a guy yesterday, he waived all contingencies on a $4 million offer. We didn't get accepted, thank God. But he waived all contingencies against my judgment because if we can't document this one thing, his deal doesn't work. And so I get an email from the realtor this morning saying, I got him to go non-contingent. We're up to 4 million. And I'm just like, that's $120,000.
The sweat's just pouring off. Wow.
Yeah. And then I got we didn't get an email. I was like, oh, yes, good.
Jeez. God.
Yeah, it's
bad advice.
Seriously.
Local lender and a realtor who has your best interest in mind. Just getting accepted is not your best interest all the time. It has to be, you got to have the protection, right?
Yeah, and that has been easier to sell. Like agents understand that we're trying to protect our clients. We don't, and like, so presenting to a listing agent and having a financing contingency, it's just like a prudent thing to do. And for me, it's been a lot easier to sell that lately.
Yeah.
Especially when they're working with lenders like you, who they can call up and you can be like, yeah, they're good to go. There's no issue. It's like truly so they can feel okay about it.
Yeah, and it benefits everybody.
Yeah.
It benefits everybody.
Protection.
The the other to speak to just working with an agent who knows what they're doing. I was on an inspection yesterday for a 2-unit building where we're doing a pre-sale inspection, kind of getting it ready for market. And the inspector was telling me that they were late for the inspection because they were dealing with a phone call from a buyer on a building where they did the inspection, 2-unit building, and they were going through condo conversion, and they didn't point out all this stuff that was going to have to get done in condo conversion, like the addition of a house meter and all this there's a bunch of different things. And I'm like, well, that's, when you're converting, that's the inspectors, they're not inspecting, telling you what to expect when they're just inspecting the condition. But I'm like, where was the agent in that regard? Like if you're buying a building to condo convert it, shouldn't you be educated by your agent on what's going to happen on this here? I'm like, that sounds like an agent issue and not a building inspector issue. But
yeah, well, that poor guy, he doesn't know what your intention is with the building. Why would he tell you?
Yeah, but yeah. Anyway, that we are coming right up on our time here. I think if we go looking, Sean, your email has gone missing from your name tag. You're now, I can see. Yeah, you're.
I think
normally
it's because I had to get promoted today.
Yeah.
I'm at sean.herrero@rate.com, on Instagram at adventurelender. You just Google my name and I'll come up.
Perfect. But and I shot you. Did you get that? Connect with that person who was looking to do the
yes.
the
Yes,
building,
thank you.
couple of building refi.
Yep,
Cool.
thank you.
All right. Haley, how do we find ourselves in the dark when we don't know what we're doing or where we're going?
Oh God. Elevation SF on Instagram and elevationrealestate.com. And to watch all of our videos, you can go to our YouTube channel. So you can search, the easiest way I think is Eddie O'Sullivan YouTube, real estate, and we'll come up. And we have a lot of really cool videos from the past, year. I mean, almost
a
8
year.
months or whatever.
Yeah, a lot of cool interviews. And I think next week, having somebody talk to us about Prop 19 is going to be a big one, because I presume that will kick in probably January 1, right? If it's
usually
passed, that's what happens, right?
Yeah.
So that really is going to be a big. I think it's an important thing for. There's so many school districts that they're have an aging population that wants to move but is on a fixed income and won't move because they can't afford to pay any additional taxes. And then when you they move out of that house and you bring in a family who pays the market value for that house, they're going to be paying in that school district a huge property tax. So it's going to be good, I think.
And we are not tax advisors, so we need somebody to come on
We
and talk about it. We are only real estate agents.
Yeah, and the guy standing behind Sean over there, he's the guy you need to ask about tax advice right there.
Compliance officer back here.
Yeah, the compliance officer back there.
Someday we're going to get on, and both Eddie and I are going to have them as well.
Yes, we're going to have her on. Yeah. Well, I already have myself. That's Mr. Incredible. I have my own picture back there.
And I just have my sheep. So,
Yeah.
A lot of sheep. But we'll get into that another time.
That's another conversation for another day.
All righty.
Awesome. All right. Well,
thanks, John.
We'll be back next week with a good and then we'll be on vacay the following week because it's Thanksgiving.
Crazy already.
And then we're giving away pumpkin pies this year, Sean. Will we put you down for a pumpkin pie?
Sure. I'll eat the heck out of it. Absolutely.
All right. Well,
you gotta come get it in the van, because I don't know if the Haley and Eddie delivery van makes it to Danville.
What's your date? What's your date? Are you guys delivering them, or are you going to do
we're delivering on? There's 2 days we're delivering on. What days are we delivering on? The 20th and the 21st. But they're available for pickup in the office on the 18th or the 19th.
Nice.
Yeah.
Come get a pie.
All right.
Come get a pie. All right.
Bye, guys.
Thank you.
Cheers.
Bye.